How's it going, guys? It's Ralphie from Beyond the Hodl. Welcome to this week's Bitcoin forecast. I want to get started by talking about the institutional orders. We'll take a look at to see if they increase or they decrease their positions. We'll also take a look very quickly at the Bitcoin hash rate. Also take a look at some Glassnode data, and as always, finish up with a price analysis on what we think is going to happen, could potentially happen next. So let's get started. Getting started, we'll take a look at the COT, and like always, I posted this on my Twitter on Saturday, and here we can see that the asset managers, so the institutional money that we want to keep track of, reduced their short exposure by 116 contracts. That's quite important because, as I keep mentioning, if you wanted this to be the low in price, this big entire consolidation that we've had, you have to see them start to get rid of some of their current open short positions. And also, one thing that we might not like is the fact that they also decreased 38 long positions. Okay, so when you look at the data and it comes in like this on a week-to-week basis, it's nice to look at it this way, but to put it into perspective, you have to go back into the actual historical and kind of piece it together, right? Because looking at negative 38 and saying, oh, well, they reduced long, so I don't want to be long. Well, that's not exactly right, because then when you go into the longs and you look at them here, yes, they reduced their longs during this down move, but you're still above the average. You see what I'm saying? So, and then you can still compare it to how bullish you've been in the past. So at the moment, like I said before, this is good. As long as they stay above their average in longs, that's the only thing that I'm looking for at the moment. The next thing that I want to look at is, did they stay below the August high? Well, yes, they did. And as you can see here, that's August 2020, and they massively decreased that position. But again, much like what happened in August, this is what I want to see. I want to see them quick reduction in their short positions to basically near nothing. Now, that doesn't mean I can't buy. I definitely, if I had my price action signal, I would have been buying even as they're reducing their shorts. But if essentially this is what you want to see they ultimately do. Because if they always have some short exposure, the market isn't really going to exponentially go into one direction, right? It's just going to be these 30% ranges up and then 30% ranges down. And guess what price has been doing the past, few weeks? It's been going 30% up, and then 20% down. It goes 30% up, 30% down. So you see what I'm getting at? If they don't choose one side of the market with conviction, and there's no conviction, because right here you can see this is the percentage of positions, and it's not lopsided. You see, when we go up with the 60 line, it's 2 to one side, right? It's too extreme to one side. You see right here, so the blue is the longs, so the longs were too lopsided all the way from September till January. Now the key is predicting when that long position is going to start to be reduced. Well, we did it, and we got somewhere in February, and then in April again that was going to happen. But nonetheless, you see right now, they haven't really had any conviction to either side, and that's kind of what's happening with price. You see this long extended consolidation. So what do I think about this? Well, I do like the fact, like I said, you see, we're staying above the average, this white line, and then this white horizontal line, we finally went above it. So this is starting to look really great. And interestingly enough, when did the net position bottom out? Exactly the same week that the price bottomed out. So if we look at this right here, and then we take a look at this, May 17th, and price bottomed, again, I know it made a new lower low there, but May 17th. Now again, guys, there's two ways that you can make a low, and the one that I want to see right now is price making lower lows. And why do I believe price is going to make lower lows? Well, that's because we haven't been able to get a price action reversal signal, okay? So there's two things that are happening in my trading plan, and that's following this institutional smart money, using these orders on a week-to-week basis, and then using price as reversal signals. And right now, although I'm seeing buying, although I'm seeing their net position go from super bearish to now being lessened and almost, and now we're net positive. So remember, it could also do this. Next week, it could just go straight down. So don't forget about that. and then that would continue the bear trend in price. And that's one thing that I'm very skeptical of right now. But what would be even nicer? Then the really nice one would be if they keep adding longs. So if these longs keep going higher, if the shorts stay below the average, and then the net position goes up as prices drop. That would be the neon sign that says, hey, buy the hell out of me. And for those of you that didn't watch my video last time, this is exactly what happened in September, right here. As this was happening, notice how the net position, you see, it was going straight up, this purple line. So the purple line was going straight up, and prices didn't even bottom out until 2 or 3 weeks later. And while that was happening, the longs were going up, and then the shorts were already below the average, straight down. That's exactly what you want to see. That's the neon sign that says, hey, we're accumulating a down move. And of course, 600% higher. I'm sure you guys have heard me talk about this before, but for those of you who are new and haven't seen that, this is exactly what you want to see. So for us to pick this as a fake move, boom, price goes down, longs go up, shorts go down in their positions. So that's what I'm thinking right now. Again, I want to see the longs keep increasing. That short position has to drop. It has to keep dropping for us to feel really good about this move. And then the last part would, of course, be the price action signal. So let's move on to the hash rate. Okay, guys, so taking a look at the hash rate right here, it's basically done exactly what we expected, right? Which was it could retrace, and if it was going to retrace, we would have wanted to see how it's going to react at around the 106 level, right around here. And the reason why I chose that to be the important level is that something caused the hash rate to go straight down from 106 to 68, right? And if that was the case, I'm assuming that that's what happens when miners go offline. Then that specific miner that did that, the specific rigs or the specific pool that did that, in order for us to start changing the trend of the Bitcoin hash rate again, those people will need to at least come back online. Now, again, with all the relocating that's happening, we don't know how long it's going to take. It could have taken a week, it could have taken a month, it could take 6 months. I have no clue, but this will give us some sort of an insight as to which players are coming back. If players are coming back, we don't know which ones. So there you can see that we did end up recovering back to this level. So some miners jumped on. I know I've been hearing a lot of North American miners and some other places in Europe. So that right there could have been what filled in that big black hole that was caused by the drop in hash rate right here. But you can see what happened. What we wanted to see was it overtake the 106 again. And look, 2 days ago it tried doing so and it failed. So much like in price, right? If there's a big swing high, and prices are going to continue going higher, you have to see that swing high get taken out. Well, this one never got taken out, and now I'm going to keep using it as sort of like my threshold of importance, because now it's touched it twice, right? So if it's touched it twice, I know that this is like the important threshold that the miners, they just don't have enough hash power to get over. So as long as this stays this way, I am going to stay. It's just another tool in my arsenal to keep me bearish in price of. So yeah, with that being said, guys, I think that's about all for the hash rate. And now we can move on to take a look at some Glassnode addresses. Okay, guys, so for the last piece here before we get to the price action and what we think price could possibly do next with certain price levels, we're going to take a look here at the Bitcoin number of addresses. Now, there's 3 different addresses that we take a look at, and that's the 100 Bitcoin, the 1,000 Bitcoin, and the $10,000 Bitcoin. I'm sorry, the 10,000 Bitcoin. So we'll start with the 10K, and it's very shocking to me that there is no increase of 10K wallet addresses, and if anything, ever since the consolidation started, we've seen a decline in the addresses. It did start to pick up a little bit here. They added 3 different addresses, so it went from 84 to 87, and now we've gotten just destroyed again, straight from 87 in one. That's like 2 days worth of time, right? So while we were in this consolidation, we lost 3 addresses. So 10K people are not buying. Let's take a look at the 1K. 1K. Also not buying. So as you can see here, we've been declining this entire time, even during this consolidation up here, which was another big neon red sign. I mean, we already know that the institutional asset managers, they were selling in the futures market, and look at that. We can also see that that supports, you know, maybe they also have 1K balances, right? They don't just play only through the CME futures. So we can see that we're also reducing exposure, and right now they're just not interested in buying. So then the next people we can take a look at are the 100 addresses. And this one's really interesting because they actually did end up increasing their buying, and so the addresses went higher at the end of this consolidation. Now remember, the 10K had already gotten rid of their positions here. Now we're seeing that the 100 peaked here. So to me, it's interesting that price didn't move a single bit while the 100 were buying, and it basically didn't even move while the 10K were buying. So that means there's someone out there, or a group of people, or a lot of groups of people out there selling into these type of addresses. And then when these addresses stop, you know, they decide to stop buying, then they're like, oh shit, now I gotta dump my bag too. And that's exactly what's happening here. So guys, definitely not seeing any buying when it comes to the on-chain data. I'm not sure what retail has in their mind that every little pump they think people are actually buying, because it is just not true. So remember, don't trust, verify. Well, we're verifying, and I don't see any buying here. Through the derivatives, we're starting to see them get into the position to start buying, right, with their longs. They went above average, and now they're net long, so that means they have more longs than shorts, but they still have a massive amount of shorts. And then here now in the spot market, looking at these wallets, we're just not seeing any buying. So with that being said, let's go ahead and talk about price. Okay guys, so everything that we just went through, that was all in your stage 1 analysis. So stage 1, remember, fundamentals, on-chain, any type of order flow when it comes to COT, and you can even use SMPDT, which I have not talked about, so I'll just include it in this part right here. But now we're going to start to talk about more on the execution stage, which is when you look at the price action and you want to mark out your levels and start to see, based on the sentiment that you gained from all the stage 1 stuff, what is the price telling you if certain levels are broken and so on. So the first level that we have to remember is this yearly open, guys. I mean, as soon as the year started, we went straight up, and then we used it as support, and that led to like a 90-something% run, a 100% run, whatever it was. Then we have, of course, the sell-off, and now we hit it again just now 3 weeks ago. So when we spoke about what levels were important, I switched this line. It used to be orange in the previous videos. Now it's purple. The reason I did that is that I wanted to add this orange color here, and I didn't want to have orange on orange. But nonetheless, remember guys, we needed to see that purple zone get broken in order to see prices move higher. Now, why did we want to see that? That's because when this price leg was made of about 31%, we know that the institutions and the asset managers were adding shorts and they were reducing longs. Then obviously the next week it's green because they added longs and they reduced shorts. But last week we just got our data and it was mixed, right? They did decrease, they reduced a lot of their shorts, but yet they didn't add any longs either. And where did they do that at? Well, they did it right as price was hitting the purple zone, which is the really important resistance that we needed to see get broken, and as we retested the quarterly open. So if you look at this right here, that's the brand new quarterly open based on SMPDT. Remember guys, I'm going to keep hammering this on every single video I ever make. The candle will not close bullish unless you go above the open. That is just common sense. And it's because of that it will be used as resistance on the lower time frames. And look at that right here. So now you had a swing high, swing low, and then a premium sell-off, right? So for those of you guys that like to do crazy stuff and margin trade, you could have margin traded that right here to here, a nice beautiful sell-off. And then notice the lower time frame premiums. It just keeps forming premium after premium. And what just happened right here is swing high, swing low, another premium sell. And now we're doing what? We're below the monthly open, below the quarterly open, these two lines here. Now we're below the weekly open. So what do you think I'm expecting? I'm expecting lowered prices. Couple that with The no longs were added again, even though you're starting to see a nice decent bullishness, but they're undecided right now. They're 50-50, their percentages, right? So they're not too long, they're not too short, but they still have a whole bunch of short exposure, as we just saw. You couple that with the addresses, there's no one buying here, and the 10K, the 1K, or the 100, even though they just buy here, but now they're starting to reduce it. And then you couple that last with the hash rate not being able to go above the 106. That was our important level to see get broken. And I think we're going to start to see some more bearishness here. So let's assume that prices do fall. So how far can it fall? That's the question everyone wants to know, right? So the first one would have to be the previous all-time high. So let's go ahead and put a line right there. So we can go ahead right here. And that would be my first target. So obviously a long time ago, back in mid-April, I spoke about a drop down to this quarterly discount and all that. And, that could happen, but that's pretty far away. So for now, I would just be very simply nothing too crazy. Just use the previous all-time high as a level that you can come back to. So if we fall, right there, about a 40% drop to 20K, and that would support our CRV drop into the quarterly demand and our Ethereum drop to its level, which we will go over in tomorrow's video. So there you have it, guys. That's what I have. Again, pretty simple stuff. You get your sentiment from all the other stuff that we talked about before price, and then once you get to price, you keep it very simple. You choose the range where you saw them either add shorts or add longs, whatever your bias is. You look at your SMPDT, and now you just wait for the levels to either get respected or broken. Now, again, because this level never got broken, that is our important level at 36.3 to 37.1. Because it never got broken, we sit back, we sit on our hands, and we stay patient. So with that being said, guys, I hope to see you soon in the next video. That's tomorrow's video. If you like this, give us a thumbs up. Make sure to subscribe, share with your friends and family, and also click on the little icon bell, the bell icon, so then you get notified anytime we make a new video. So have a great day, guys, and I'll see you soon.